Hey guys, Dave Keller here with Market Misbehavior. Crude oil went below $0 yesterday. Went negative $30, $40 a barrel, $45 a barrel, something like that. So I wanted to talk about that. In particular, not necessarily what that means for investors, but what it means psychologically when something goes beyond a barrier you think is unbreachable, right? When something goes negative. So what actually happened was the May crude oil future went below $0, went negative, and the thing you have to remember with futures, and I'm going to get more into this with on my show, The Final Bar on Stock Charts TV today. But basically, futures, commodities roll contracts every month. So the June contract is actually the one that's very liquid. That's the one that everyone's trading. This is the May contract, which is relatively illiquid. It's sort of wrapping up its existence, and so it's very lightly traded. And so just a strange phenomenon of how things rolled, and a huge amount of supply, a glut of supply, and minimal demand because of people traveling less, basically has a surplus of oil and nowhere to put it. And essentially investors in those May contracts have to pay someone to take their oil from them, which seems kind of counterintuitive, but it makes sense. Now, besides that sort of statistical, logistical part of why crude oil went negative, I think it's more about the psychological part. We don't think that that could happen just because we never imagined that that's a possibility, right? Could crude oil actually trade in negative terms? Well, now we've all learned it actually can. People are struggling with this now with the fixed income markets and yields going negative, right? We have negative real interest rates, meaning, instead of getting an interest rate on government debt, you're actually have a negative interest rate, right? You lose money by owning this thing. But when faced with losing much more money in other assets, it doesn't seem like that bad of an option, right? So the problem, though, is when it gets down to zero, when interest rates get down to zero, they've been sub-zero in Europe much before we've approached it in the U.S. People struggle to just understand what that would even mean, and again, it gets back to that failure of imagination. We don't imagine that that's a possibility, and as a result, when it starts to happen, we're unprepared for it. It reminds me of the Apollo 1 fire. If you think of the U.S. space program, right? There was this fire in the Apollo 1 mission where the 3 astronauts got trapped in the capsule on the pad, right? They hadn't even, it was just a test to fire up the engine and go through some systems, and basically a fire and unfortunately killed the astronauts that were stuck in the capsule. And Frank Borman, who was interviewed in front of a congressional committee, I believe, basically was asked, what happened, what failure, who failed here? And he said it was a failure of imagination. We just never imagined that you would be on the pad and would need to get that door open in that scenario. And as a result, we just never figured out a way to do it. We just never imagined that as a scenario. So as investors, more and more with how volatile things are, with how we're dealing with truly unexpected times and uncertain times, with how the market, how the economy is dealing with, an economic shutdown, how the economy is going to recover. It's not going to be a flick of a switch, but how things actually transition back into a more productive sort of normalization of the economy. We still aren't even, we're just starting to measure the impact of the coronavirus on companies and on the economy as a whole, right, on the stock market. So when things are so uncertain like this, it is a time for investors to imagine different scenarios, to really think, put your thinking caps on, and just imagine what could happen, what scenarios are possible. And don't limit yourself to what your experience has been, because if you've been investing for only the last 5-10 years, all you've really known is a cyclical bull market within a secular bull market. And I will tell you, there are 4 other combinations to deal with, and right now we are arguably in a cyclical bear within a secular bull. And at some point, we will be back in a secular bear market, and those are difficult and challenging and frustrating. We may be in one now. I think that remains to be seen. That's always much more obvious in the rearview mirror. But my point is, I think now is a time as an investor to be more imaginative, to take off the blinders, to think bigger picture, to think about what could happen, and then look at your portfolio, look at how you're structured, and write down some ways that you would handle different scenarios. Crude oil can go below zero. Interest rates can go below zero. The stock market could go down another 50%. Highly unlikely, but it could. And so what would you do in those scenarios? Make sure you imagine them now. Don't wait for the unrealistic, the unexpected to happen, and then start to figure out how you're going to handle it as an investor. This is Dave Keller for Market Misbehavior. Be safe. Take care.